Hello, CA students. I hope yesterday's costing paper was gone very well for you, especially MCQ's part. They were easy but little lengthy. I hope everyone has written very well, and please concentrate on your next paper. I would like to give the suggested answers for MCQ's part, only MCQ's part, because I don't want effective preparation. And why MCQs means many students have sent their answers for me, and they want themselves to confirm whether the answers are correct or not. So here is my suggested answers the MCQs part. Alternative views may be there, but I've gone with my experience and my knowledge. So if there is any doubts or any queries relating to that, you can get back to me. So let's get into our MCQ part video. So if you see the questions yesterday, the first question was case scenario 1. So it was more relating to process costing. So they were saying that Mr. Sahil was recommending weighted average cost method, but another manager was recommending FIFO method. So all this stuff they've given, and they've given details of the process account details here with opening WIP. So what are the questions they've asked here? Let's check the questions here. You are required to calculate the following using FIFO method. So clearly stated that we need to use FIFO method for valuation of our inventory. Not just that, even valuation of the abnormal loss, we need to use this FIFO method only. So in this case, if you want to answer all these questions, you need to prepare those 3 statements. What are those? Equivalent units, you need to know. Cost per equivalent, you need to know. So that is what I've done here. Let's see here. If you see scenario 1, equivalent units under FIFO method. Total input here, opening work in progress, raw material introduced, total is 86,500. Material equivalent units, I got 72,770. Normal loss, we should not take any equivalent units. Then how many units are transferred to next process? 82,000, which is not given directly in the question. So how to get this units completed during this period? Total input, opening WIP plus raw material introduced minus closing WIP. If you do minus closing WIP minus the scrapped units, you're going to get how many units are produced, completed during this period. So since we are using FIFO method, out of that, opening is 12, balance 70,000 is out of fresh raw material. We all know that out of opening WIP, we shall only consider what is the work completed during the period. So metal was already 100% finished during the previous period. Labor and overheads, how much work has been done in the previous period. You can see opening WIP, labor and overheads, only 80% work has been finished during the last period. So balance 20% part only has been done in the current period. So we need to consider only balance 20%. See here, 2,400. Whereas for the 70,000 units which were processed out of fresh raw material introduced, that we can consider 100% for both material as well as labor and overheads. Closing WIP, they have given the degree of completion. Accordingly, we have taken the equivalent units. Abnormal loss also given. Scrapped units degree of completion is given. So I got here equivalent unit 72,770. Labor and overhead 74,079. Then we have to find out what is the cost per equivalent unit here. Material cost, we have to remove the scrap value of normal loss divided by equivalent units. We got 6.5. Labor also cost divided by equivalent units. 5 overheads. Cost divided by equivalent units 4. So overall total cost per unit is 15.5. Now we should value the inventory here. First, I took how many units are transferred to next process. Overall 82,000 units were transferred. So out of that opening 12,000 units, first we need to get the total cost. To get the total cost of 1200, in the previous period, whatever cost was incurred, plus current period, whatever work completed for opening WAP. Material was nil. Only for labor and overheads, they performed 20% work. No, so 2,400 equivalent units into 21,600. So you got 1,87,800 for 12,000 units, and fresh raw material introduced out of that process 70,000. Completely, we can take 15.5 because everything is done in the current period only. So what is the value of units transferred to next process is 12,72,800. That is the first question what they have asked here. The case scenario. Value of units transferred to next process. So 12,72,800. Then what is the value of closing work in progress? Value of closing work in progress. Closing work in progress units are 2,600. So we need to get the material component and labor component and overheads component. Material equivalent units 2,600 into cost per equivalent unit. Labor and overheads equivalent units have taken combinedly, given the cost per equivalent unit. So 30,940 is the answer. So which one is the correct option here? 30,940. Option C is the correct answer. Next. Third one, equivalent units of material and material cost per unit. So how many equivalent units we got? 72,770. And check here the equivalent units for material 72,770, and what is the cost per equivalent unit? 6.5. Next one, what are the equivalent units of labor and overheads? We got exactly 74,079 units, and what is the cost per equivalent unit? 9. So that is combinedly for both labor and overheads. You can check here. Labor equivalent units, overhead equivalent units are same. And what is the cost per equivalent also? You can see here. So combinedly it is 9. So what is the correct option here? A is the correct option. Next, what is the value of abnormal loss to be shown in process account? We know that out of total 1,900 units scrapped, you can see here, they've given that unit scrapped is 1,900. Out of this normal loss, if you remove, balance is abnormal loss, which is equal to, what is the normal loss? 2% of the total input. So if you remove the normal loss quantity from total units scrapped, 1,900 minus 1,730, it is 170. So 170 units valuation I've done here. Abnormal loss. Material component 170 into 6.5, labor and overheads equivalent units 119 into cost per equivalent unit. So 2,176 is the answer here. 2,176. So option B is the correct answer. So that was case scenario 1. Case scenario 2 is relating to raw material valuation, valuation of material receipts. This concept is valuation of material receipts. Valuation of material receipts. On placing of order, we receive the raw material, and when you are issuing the raw material, we require assigning the values to the raw material. So that is the reason always we record first the stores ledger. What is the purchase cost per unit here? So in this question, they have mentioned that component B is being purchased. Purchase price per unit is 4,800. Trade discount 2% of the purchase price. Total duties, no credit is available. So 8% of the purchase price. Insurance charges is 62,000 per year. Units purchased during the year is 60,000 units. Opening stock 5,000, valued at 5,150. Closing stock 4,500 units. So here, what are the requirements of this question? We'll see. See, if you want to value this, if you want to find out what is the purchase cost per unit here, what are the things we need to consider? Purchase price we need to consider. Trade discount, what we need to do? We need to deduct. And the total duty, since there is no credit availed here, so you can add to the purchase cost, which is 8% of the purchase price. Isn't it? So insurance charges 62,000 per annum they are giving. So insurance charges here, they've given 62,000 per annum. But they have not given whether it is transit insurance or after receiving, they have not given here. So we can clearly understand that 62,000 per annum they have given. No? So you can assume that that is storage related insurance charges, not relating to transit. So with that assumption, what is the purchase price per unit we got here is 5088 is the purchase price per unit of raw material. Yes. Let's see the questions now. What are the questions they've asked? Apart from that, they also give what is the raw material usage, delivery period also, minimum, maximum, average. Lead time for emergency purchases 2 weeks. Additional information, normal wastage during the storage is 80 units, abnormal wastage is 40. Factory works for 365 days in a year. So you're required to calculate the following, MCQ 6 to 10. Calculate the average number of days for which average inventory level to be held. So here inventory holding period they're asking in terms of days. So what you can do is here, you can apply the formula raw material consumed divided by average stock of raw material. You can use this formula. And for getting the raw material consumed here, what you can do is, what is the raw material consumed during the period? We can calculate first. What is the raw material consumed? Opening 5,000, purchased 60,000, minus closing 4,500, even minus normal loss and abnormal loss. If you remove raw material consumed, we got 60,620. This is your raw material consumed. How do you get average stock of raw material is opening plus closing divided by 2. So we got the average stock of raw material 4,750. So how do you get raw material holding period is 365 days divided by inventory turnover ratio, ITR. So 360 divided by, how do you get inventory turnover ratio? Raw material consumed divided by average stock. I got 12.76 times. So 365 divided by 12.76, I got approximately 29 days. That is the average holding period. See here, I've considered only quantity. Alternatively, you can also calculate the value of opening, purchases, and closing, and then you can value. Still, you'll get the same answer, 29. So, what is the first question answer here is 29 days is the correct answer here. So, raw material consumed divided by average stock. If you do, you will get inventory turnover ratio. 365 days divided by, if you take that, inventory turnover ratio, you'll get number of days, average inventory holding period. Then next question is, calculate the abnormal loss during the storage to be transferred to costing P&L. We all know that abnormal loss will be charged to costing P&L. Here, specific requirement is given. It should be valued based on average price. How do you get average? Average means simple average here. So we have both opening as well as purchase quantity. Out of that only you have this. So what you can do is, how do you get opening? And take the average price. Opening stock price, purchase price, both have taken divided by 2. You're getting 5,199. 5,199 into abnormal loss quantity is 40. So 20,000, 2,04,760 is the answer here. 2,04,760. This is the answer. That is the abnormal loss value according to simple average price, which you should charge to costing P&L. Next, calculate the cost per unit of cost of material by using average price method. By using average price method, calculate per unit cost of material by using average price method. per unit cost of material by using average price method. So what is the per unit cost of average price we got just now? I've shown in the calculation also. Average cost per unit, how much we got? Per unit, no, this is 5,199. So answer is 5,199. Calculate minimum stock level. What is the formula for minimum stock level? ROL minus average usage into average lead time. So first you have to calculate reorder level, then take the normal consumption. To deduct from that, you will get what? Minimum stock level. That's what I've done. How do you get ROL? Maximum usage into maximum lead time. Minus normal liquidity, you are getting 2,925. So answer is 2,925. D is the correct option. What is danger level of stock? How do you get danger level of stock? Basically, danger level of stock is nothing but if you want to urgently place an order, how many days your supplier will take. So that much stock only we call it as danger level stock. So lead time for emergency purchase, lead time for emergency purchases into average consumption. This is how we can get the danger level stock. So what is the lead time for emergency purchase given here? You can see clearly given 2 weeks into what is the average consumption? 1,125. So 2 into 1,125 is 2,250. That is the right option. 2,250. So C is the right answer. So that was relating to material chapter. So always in the classroom, I strongly, repeatedly, I tell that you need to go concept wise. Now you might have understood this question. You can answer only you know how to do valuation of material receipts, isn't it? Some of the students might include even insurance charges also. What is the reason why insurance charges are not considered? These are not transit insurance. Transit insurance only can be included in what? Cost of raw material, not the storage insurance. Yes. So while calculating the purchase cost per unit, you can only consider transit insurance, not the storage. So that was relating to material chapter. Next, 11th one is relating to labor chapter, labor turnover using separation method. What is the formula? How to calculate turnover using separation method is number of separations, both resigned and as well as what? Discharged, divided by average number of workers. So beginning, they have given how many workers are there? 150. But they have not given at the end of the month, at the end of the year, they have not given what is the number of workers. So we have to calculate first number of workers at the end of the period. How do you get number of workers at the end of the period? Opening 150, resigned, discharged, you have to deduct and add a number of replacements. Number of replacements. So that is 130. So opening 150, closing is 130, average 140. So separations is 30 plus 5, 35 divided by 140. You will get what? Labor turnover using the separation method. That is 35, 25%. Sorry. So number of workers at the end, average number of workers, labor turnover by separation method is 25%. So answer is C. Next question. Question number 12. So this question again was relating to process costing only. So in this question, the requirement is you are required to calculate the per unit cost of units, per unit cost of process 1. So average cost per unit you need to get. How do you get average cost per unit? Total cost of the process divided by what? Input minus normal loss. What is the total cost? 6,87,960 divided by what is the input of this process? 58,500 minus normal loss 2% if you do, then you'll get the average cost per unit. 12th one. You can see here 6,87,960 divided by 58,500 minus 2%, 12 per unit. That is the average cost per unit. So A is the correct answer. Yes. Then 13th one is relating to marginal costing. Marginal costing, PV ratio. They've given that PS Limited is facing downfall in its demand. Marketing team has suggested to reduce the selling price by 5% to compete in the market. Variable cost is exactly 76% of current selling price. So variable cost ratio is 76%, means PV ratio is 24% currently. So let selling price be what? 100. What is the variable cost? 76% of this. So 76. So 24 is the contribution per unit. Now, what is the recommendation here? If selling price is reduced by 5%, if I reduce my selling price by 5%, it will be 95. But variable cost ratio will not change, Variable cost per unit will not change. It will remain same. There is no change in it. So 76 only. 95 minus 76. It is 19. So 19 divided by 95 into 100. What is the percentage? 20%. So what is the correct answer? 20%. So after reducing the price by 5%, the revised PV ratio is 20%. 13th one now. So old and new are presented here, 20%. Now 14th one is a very simple one. Missing figure question relating to EOQ. They have given EOQ. They have given ordering cost per order. Carrying cost, you can calculate 2 rupees. Annual demand, they have asked. If you substitute in the EOQ formula, you'll get that. It's a very simple one. The correct answer for that is to substitute in this, remove the square, squaring on both sides if you do. So I got annual demand of raw material 22,500. So right option is D. 15th one is relating to labor cost chapter. Here you have to find out what is the normal hourly wage rate for the Bhuvan. So they were paid at, their wages are same here. That's what is given. The total earnings for both the workers are equal. So they've given enough data in the question to find out what is the total wages of, first we have to find out what total earnings of whom we have to find out. First we have to find out total earnings of Raj. So basic wages plus bonus. What is the bonus scheme applicable to Raj? Row 1. So basic wage, how do you get? Actual time taken into rate per hour plus bonus, how do you get? Time saved into proportion. Actual time divided by standard time into rate. If you do his wages, we are getting 3,780. Even now, Bhuvan is also getting the same wages, total wages. So that I equated. But for Bhuvan, what is applicable? HALC plan is applicable. So we don't know what is the rate here. We have to find out. So this is basic wages. This is bonus. So actual time taken by Bhuvan is 120 into rate per hour. We don't know. Time saved. What is the time saved for Bhuvan? He took 120 hours. Standard time is 150 hours. 150 minus 120, 30 hours. So 30 into 50% is the bonus into rate. We don't know. So if we solve this, R is equal to, we are getting 3780 divided by 135. 28 we are getting. That is the rate per hour. So 15th, D is the correct option. So that's it, guys. Okay, this is only, just to confirm whatever you have done is correct. Okay, even if you have missed 1 or 2, there is no issue. In descriptive question, you can make it up. So all the best for your next exams. Thank you.